Welcome to the channel, everyone. This is Talking Sense. If this is your first time here, please hit that subscribe button. I would truly appreciate it. In today's video, we're going to be looking at a South African stock, DRD Gold, which is a subsidiary of Sibanye. Sibanye owns just over 50% of the company. Now, the reason I want to talk about it today more specifically is because gold has been rallying over the last week or two, and it could be related to the turmoil that we are seeing in Ukraine with regards to Russia and NATO. But I think the move was destined to happen. So this is just maybe a small catalyst as to why it is taking off now. But if you look at the gold chart or even gold miner charts, many of them were signaling that they were going to break out. So for me, charts, they aren't always indicative that they aren't always moving because of a news event. Sometimes they actually predict the news. So I'm not saying that all news events don't have any impact on share prices, because they can in the short term. But usually with chart patterns, you can actually see or make plausible assumptions that it could break out. And usually they do when there's a catalyst or a major news event. Now we're looking at gold, DRD Gold. So I'm going to just plot a few lines here for you, just for simplicity's sake. So we're looking at the weekly chart. And why I'm looking at that is because it has moved quite a lot. Let me just change this to a line graph so we can easily see where there are resistance areas. So we'll put our first line there. We can put another line just there. We can see that there's those channels over there. And let's switch back to the candle chart. So we've got our first support and resistance channels, just simple, straightforward to help you. And then we can see that DRD Gold is hitting its head now, which is after a nice big rally, after 2 weeks of rallying up. There will be some profit takers along the way. It would probably be wise to take a bit of profit if you are a short-term trader. Now, there were two key signals here to show me that it was time to go long. The first one on the gold chart was the gold chart was breaking out, and it was also coinciding with a double bottom in DRD Gold. So what I mean by that is you can see we have a bottom there and another bottom there. A double bottom usually signals that the stock will reverse and then it's going to move to the upside. You can see we had this downwards channel 2, and we can see that breakout. Now, this is an important position to take note of. I'm not really a fan of using too many indicators. They are lagging indicators, which means they only show you what's happened and not what's going to happen. So we would use maybe volume or other things to help us in making decisions. But why I say now could be a good time to take a bit of risk off the table or cashing in some profits. I'm not cutting my exposure completely to DRD Gold, but I will take some profits and shift it into something maybe that's more unloved. I'm still looking on that, so I won't mention what that is just yet. But we can see that we'll just use the RSI, an indicator. We can see that it's also approaching oversold. It's also coinciding with a strong resistance area around about 17. You can see that little wick over there. It's starting to pull back. Now, it could easily break through that depending on what the gold price does. The gold price is also currently hitting its head on 2,000. It crossed 2,000 early this morning. It's pulled back to 1988. $1,988 an ounce, and it's pulled back. So I would expect DRD gold to do the same, and it could potentially retest a few areas. We could say maybe it could back test to about 15 or so. Let me just put that on a line chart and we can see what we're working with. Line chart is always a little bit easier to help us decide where potential support zones could be or resistance zones. It just gives you a clearer picture of what you are dealing with. You can see how my line was sort of out of whack there. Can just bring it back. Now I'm just doing this quickly, so just to give you some understanding of what we are dealing with. So we can see basically DRD gold has been in this downtrend since July 2020. So almost 2 years of just, if you were just holding, if you were unfortunate to buy there, you would have been just holding all the way down, maybe dollar cost averaging in and actually just losing your money in the long run. So in that case, it would have probably been better to either cut your losses if you were trading. Otherwise, I do think gold is going to continue rallying, but there's going to be certain resistant points along the way where DRD gold will smash its head and pull back. And I believe those pullback entries will be times to buy. So I'll take a little bit off the table now. We could see a little pullback depending on how significant that pullback is. Normally stocks, when they break out, they retest breakout zones. So I don't think it would go all the way down to 12 Rand again, but depending on a global scale of what's happening with the markets, when everything gets liquidated, nothing is immune from this. So we could be heading towards massive recession, depression, where everything just gets liquidated like we saw in March 2020. And then the fastest or the best assets will recover after that. So we could see a major flush out, liquidations across the board. If we don't go to that extent, I still think DRD should pull back, a little bit of profit taking before continuing its climb a little bit higher. So we could see something like that play out. It won't just continuously go up. So we need to just keep an eye out for that. Like, it probably won't do that straight up. But also, with that being said, we don't know. These are just guides to help us with our entry and exit points. That's why I would never recommend going to buy into DRD gold now with all your capital. I would assume that a pullback would come for profit takers. That would be a perfect entry to build your first position and then ride it up. Otherwise, we also can't predict that it will pull back. So you could enter now, but you wouldn't want to enter with all your capital, because then that would make no sense, because if it does pull back, then you're starting in the red and then you have to wait for it to recover again. So you wouldn't go in with all your capital. You would do it in tranches, and you would have risk management like that. But we'll see. Like I said, let's just quickly conclude. I want to make this video very short. It was in this downtrend coinciding with gold, its consolidation period. On the gold chart, it also broke out, and you can see it's coincided on this too, on DRD gold. We have the first bottom, double bottom. That was a point to start accumulating. Most people were scared to do that then because of this downwards trend that it's been in. So this is something that you get rewarded for taking that risk. We were building positions in here, and now we are cutting a little bit of exposure towards the upper 16, 17 mark. Take a little bit of risk off the table, take those profits, sit in cash, look for the next opportunity, potentially add to the position if we do see a pullback back down to about 1450, 1460, and then continuing up. Now, these pullbacks are actually healthy for these stocks because nothing can continue to keep going. Now, if we are reversing into an uptrend, the double bottom was a clear signal for us. We can see the 50-day moving average is starting to turn up, which might intersect over the 200-day. People will know that as a death cross or the golden cross. Again, it's just indicators. It's a lagging indicator. Doesn't mean it's necessarily going to continue, but it's showing you that the stock is starting to move upwards, which is coinciding with gold. So it's one to watch. Keep your eye on it. If gold continues to rally because of the uncertainty in the global markets, then DRD gold, I think, will be a beneficiary. Profit should increase. This would also translate into a little bit more profits for Sibania. And again, this is not something you would hold long term. You can see what happens after the rally up. You want to be taking profits along the way. You can never predict when the top is going to happen. And you also don't want to be the last person holding the bag, because anyone that got in here or didn't take profits subsequently saw all their gains erase, or those that got in late are now in a loss, and they are going to want to get out immediately as soon as they break even, or they'll cut losses at a little bit of a loss or less of a loss than what they would have had. So those are the resistance levels that will push it back down as it goes, as those people exit their positions that have been holding for a long time. So I hope that's a little bit clear. And if you have any comments, let me know in the comment section. We'll end the video here, nice and short and sweet. And again, thank you for the support. Please hit subscribe, and I'll see you all in the next video. Bye for now.